Happy Friday, Eric Bible with the Bible team at Neil Home Loans. And let's talk about the elephant in the room. Rates, they're being stubborn. Yes, we saw some decline from last week, but let's be real. Everyone thought, myself included, by this time, in this very moment, we would see rates low sixes, even high fives. And here we are still talking about rates in the sevens. It stinks. No way to deny it. But as I've been saying over the last few weeks, it is not deterring market activity. Personally, we have been the busiest we've been in years. And talking with other originators, other real estate pros throughout the country, the feeling is the same. Buyers are excited. Sellers are eager. We're seeing a much different tone from clients across the board. So there is absolutely activity. It continues to ponder the narrative that as rates correct with inventory levels where they're at, we're going to see home prices accelerate at a pace we've not seen before. So with that, we start this morning, 30-year fix 7.10, down from last week 7.16. And it's really trying to tread water. Markets are treading water until we have definitive action from the Fed, which, yes, we'll get later this month with the Federal Reserve's meeting. Now, I don't believe we will see the first rate cut this month, but we should have a clearer picture of when we can expect. So let's understand the data this week, get to some strategies that are winning. And as always, we're available here to answer whatever questions you may have. So first and foremost, data of the week. PCE, personal consumption expenditures, Fed's favorite measure of inflation, that 2% target we continuously hear about from Jerome Powell, other members of the Fed. Well, this month, again, actually last month, I should say, for the month of January, 2.8%, down from last month's the month preceding 2.9%. Lowest reading we've seen since February of 2021. A move in the right direction for sure. Now, we're not at the quote-unquote 2% target, but we do have a 2 handle, and there is credence for the Fed to start looking at more definitive response of rate cuts. Now the talking points move to employment. Employment remains very robust, yet we're hearing massive chatters, and we're seeing it show up in some of the data, layoffs. Tech sector is getting hit like nobody's business right now. And this week, again, we saw continued claims rise. So individuals that continue to file for unemployment because they're unable to find a job, we saw that number rise. Additionally, we saw the initial claims rise. Now, next week, we do get the jobs report next Friday, so we'll have an update around that. That will be incredibly important as it's the last jobs report before the March meeting for the Fed. And here, it's all speculative at this point. Yet, if we start to see this data push through into the actual metrics, unlike the report that we got for January, there could be an argument that if we see unemployment start to rise at a precipitous rate, we could see rate cuts sooner. Now, again, I don't want to speculate. Ultimately, the Fed is the Fed. The Fed's going to do what the Fed does. We're not going to talk on behalf of the Fed, but the argument around the economy, specifically jobs, being weaker than the reports have indicated are starting to potentially show up. So definitely information we're going to continue to watch. And as that data comes available, we will share. Big thing that I want to touch on this week is strategies that are working. Cash buyer and bridge. And yes, it's not the traditional bridge. So first, we have a cash buyer program that allows the client, especially an individual that has a home that they need to sell, they can purchase a new property in cash, and it's significantly cheaper than most other options that are out there. We purchase the home on their behalf, the program that we offer. They buy it back after the home sells at the same price. If you want to know more about that, definitely reach out as it is gaining massive traction in market. The other one that is yielding massive success is our guaranteed backup offer. It's effectively a bridge option at a fraction of the cost. I can't tell you how many times clients have called, hey, I need to sell my house. However, I have to get the equity to purchase the new home, but we all know the outcome. A contingent offer, especially in this market of all, is near impossible, if not outright impossible to get accepted. So it puts that buyer and seller back on the sidelines. Well, we have an option that allows us to purchase the new home before they sell that other. And no, it's not a bridge. Bridge can be 4, 5, 6, 7 points on the total debt, or this option, $2,500. We partner with a company that provides an offer for that property that they need to sell. It allows us to exclude that debt. They can purchase the new home, take their time to sell their departing residence. It is a phenomenal program. One of the better programs that I've seen over the last few years, and it is working. It's creating inventory where inventory was not there before. If you want to know more about this program, definitely reach out. Lastly, I've included a graph that encompasses the entire nation. So yes, you're feeling busy. We're feeling busy. The rest of the nation is feeling busy as well. We're seeing buyer activity heat up. Spring is right around the corner. Hopefully, lower interest rates are right around the corner, but irrelevant to that point, demand is in full force. These programs can help satisfy that demand. As always, if you need support in conveying any of this message to your clients, we're here to help. As always, make it a fantastic Friday and an even greater weekend. Thank you.